So today we're going to be talking about how I evaluate stocks, and it's going to be another kind of sit down, I say sit down standing up, like I always say that, and just talk about how I end up kind of evaluating a stock in a basic way, and then I might do some other videos on maybe how I go more in depth with certain things, but we're just going to roll with it, and I'll explain how, because I literally get requested this all the time. And the first one is, to be honest with you, the first step is YouTube and Twitter, well, X as they call it. That's where I get most of the information from, and that's where you can actually get some great picks already done for you. So that's the way people that are looking at stocks, they have some great picks themselves. So you can then go from there and go, is that something I would like to invest in? Do I believe in this business model? Do I think it's pretty good or not? And that's a good way of starting off. Firstly, to be honest with you, instead of having to obviously go blindly, let's say pretend you didn't watch any YouTube or go on Twitter, and you're literally with Trading 212 in front of you, where do you begin? Well, you would have to do big deep dives yourself, and people have already done almost the hard work. Obviously, don't just blindly copy it. Actually go and see if they've said exactly what they're saying, see if everything is what they think it is, because then otherwise you're literally just going in blindly and have no idea and just going off what someone thinks. That's literally what you shouldn't do. You should just use that as a base, a little starter, and be like, is this a good stock? And sometimes you see the same names all the time with certain people, with a lot of people, because it is generally a good stock. I'm not going to disregard that stock because someone else has picked it. That's stupid. We're all here to make money. So I hate that thesis. I hate that thing where a lot of YouTubers go, oh, I don't think that's a good stock because someone else has got it or someone else is doing it, so they don't end up using it. We're all here to make money. We're all here to find the best businesses in the stock market, pretty much. So that's the first step I go with, really. So Sofi, we're going to use as an example because this is the one I'm buying up heavily at the moment. As you can tell in my portfolio updates, I have been buying up Sofi heavily, and there's reasons for it. It's because the member growth obviously is crazy. They got different types of business models. They're not just a bank, which if you're just evaluating it as a bank, there's so much growth there for them to do well with the numbers that they're pulling. So the market cap in that sense, obviously, if you look at the market cap, it's like 17 billion, and some of the big banks are in the 200s to 400 billion market caps off the top of my head. Don't quote me on that, but I know there are a few with 200 billion market caps, so there's big growth there. Biggest bank is got a market cap of 750 billion, so just that alone, so even them to get to 200 billion to 100 billion, that's a lot of growth for Sofi, and even by then market caps will be higher because obviously inflation and things like that. The next thing is you can go off guidance, and this is probably the easiest way of kind of evaluating a company, is by going off someone's guidance on their earnings per share, the revenue growth, and things like that. So the EPS, the earnings per share, is pretty much how much a share is making for the share that you're buying. So each share that Sofi are guiding for at the moment, so Sofi are guiding between 55 cents and 80 cents for their earnings per share in 2026. But let's go off the earnings per share because this is quite an easier way to find out where in 2026 the share price could be. So on screen now you can see the breakdown, and please ignore the 2027 and 2028 because I've not actually filled in that in properly. So please ignore 2027 and 2028 because I do believe they will be earning way more than what they are saying for the earnings per share in these columns that I've put in. So please ignore them columns, but to be honest with you, it's probably a good thing because then it just shows you a bit more of a base / bear case of Sofi, not to get to set your expectations high, but let's more concentrate on the 2025 to 2026. So if you go off the guidance, which is 55 cents to 80 cents per share, and they sandbag their earnings, they normally do a lot better, Sofi, so they normally smash their earnings. So but anyway, let's just go off what they're saying. I went on the fact that they're going to do 67 cents per share, and so that's kind of in the middle of what they were saying really. That would mean if they had a PE ratio of 60, they would be $40 a share, and 70 PE ratio would be $47 a share. And PE ratio is pretty much how much someone is willing to pay for the stock. So for instance, obviously, let's to make math simple, if there is a share making $1 a share, earnings per share, then and the stock is trading at 10, then they're willing to pay 10 times. And that's what price to earnings is really. That's what, yeah, it says it in the name, price to earnings, so how much a share is going to be paying you. And some people are willing to pay 20 times, 25 times, 50 times, sometimes even 300 times, which is what Palantir is at the moment. And that is what, when there are crazy valuations really, and that's when you've got to kind of think, do I sell, or do I think it's going to grow into that? But sometimes when they're at 300 price to earnings, then in some cases they're kind of priced in for years to come, and it's like, is that kind of dead money in that sense at that point? But obviously this is where you can go into more depth of like revenues. Are they growing their revenues at 40%, 50%? Do you think they're going to be going onto them or not? And then how much are they making in the bottom line with the net profits and all sorts of stuff? How much are they growing with the members? Is there something in the business model that you can see growing a lot more to get to a better bottom line, which is the earnings per share? Then that's where you can get a bit smart with it and see before any other investor, and that's where the good investors get into stocks at very incredible prices. So hopefully that did make sense. But with the software that I'm using, it allows me to kind of get a gauge, like I said on the screen, with the earnings per share and what a P and what the P would command. And if a stock's growing at that much, 50 to 60 P ratio is very reasonable. I think so far at the moment it's like 45 P ratio. So, and obviously Tesla's 200 P ratio, I believe. And Palantir is, like I say, 350 or something. So really high growth stocks. AMD I think is 100, although their forward PE is going to be like 21. So yeah, that's how you can kind of evaluate a company, and I hope that kind of helps. That's just kind of like I'll say a basic way. That's just a good way to start, and a good way to kind of start looking on YouTube. And the best thing to do is also just research on YouTube. There are so many YouTubers that are way better than me. Well, they've had lots more experience, 20 years experience, 30 years experience. They'll be able to tell you other metrics to go off, other ways to evaluate a company. But I just wanted to kind of go off a bit of a, you could say, basic way of evaluating a company, and gets you on a good stead, because you don't want to get into the stock market and be buying a company that's way overvalued. And that is just a good start to be able to see what they're actually doing, because you can easily get caught up in buying an overvalued company. Yeah, so that's why I'm buying Sofi now, because I see it being, like I said, a $40 stock in the future. From the graph I'm showing. So even when it was 17 I was buying. Yes, it's dropped down to 14, but I didn't care buying at 17 because I know what the future price is going to be. I don't mind buying it at 17, 16, 15, 14. As long as I've got money to buy, I'll be buying. Obviously I've got more money left over on the side just in case there is big drops, like $10, $9, and I'll be buying in. But yeah, that's kind of, I hope, a bit of a breakdown on how I kind of evaluate a company in basic terms, as a start in a way. And then, like I say, even going off the guidance and that, you want to see if they're not making it all up and going off and saying random numbers. You need to make sure that they are growing. Any metrics you can go off to see that they're growing pretty much, and how much are they spending? Are they making a profit? Are they looking like they're going to become a profitable company? There's just so many different things you can look into, and that's why the earnings calls are really important to actually listen to when you've got into an individual stock. If you don't really want to get into individual stocks, just buy an ETF and they can do it all for you, and you don't really have to pay attention. Just buy the S&P 500 and just let it go. So yeah, but yeah, hopefully you enjoyed this video. Hit the subscribe button if you're new, hit the like button if you're new, and also if you want to see my buys and sells, then link in the description. It is $1.99, although I think I'm going to put it up in price because I didn't realise as well, YouTube takes like 50%, so it's like 99p that I'll be getting from it, and I will be keeping, obviously, the people that are currently on it at $1.99, but the $1.99 subscription just won't mean that you get the buys and sells. The ones currently in it will, but the future price will be the one that will get the buys and sells. But hopefully you enjoyed the video, and I'll see you guys in the next one.